The following is for information purposes only and should not be considered investment advice. All opinions and views expressed by the contributors to this podcast are in a personal capacity only. They do not represent the views of Progressive Equity Research or any other organisation mentioned in this podcast.
Hello there, and welcome to Talk Tech from Progressive with George O'Connor and myself, Ian Robertson, the podcast where we talk about the UK small and mid-cap listed tech market and try and bring some facts and understanding to bear. George, what's caught your attention since we last spoke?
Oh, hey there, Ian. In terms of me this week, I've been captured by Keir Starmer. So Keir's been wandering around with a report card in his hand. He's talking about his pledges. And I took that and I said, I need my own pledges. I need my optimism card. So what I've been doing is I've been looking around on reasons to be optimistic. So first off, because I've got a card, Ian, the card has been created. So item one on my card is the economy isn't as bad as we thought. We have had stronger GDP growth. The numbers aren't earth-shattering, but stronger than expected last week, 0.6%. Woohoo. Remember our higher for longer equals lower for longer. Higher for longer cost of capital, lower for longer equals valuation.
As close as the market ever got to a DCF, yes.
There's some good news on that as well. The 10-year UK gilt is now hovering just over 4%. So we've got that, and we've also got this sort of inkling that maybe BOV is going to start tinkling those rates down. So that's a real positive. We've also got, as we're looking in terms of the macro side, we've got a chancellor with a marginal seat starting to make positive noises about technology.
Clearly looking for a job in the technology sector.
Well, it's on my report card. You're jumping ahead, Ian. We've also got, from the industry analysts, Gartner Group, they have raised their IT spend expectations for the year. They're now at 8%. That number was 6.8%. Now, the issue here is that they haven't raised them in living memory. So this is a real plus on that one. As we look into the subsegments, if we look at tech services is, of course, the sort of the largest sector that we've got on LSE. The Gartner guys see that as being ahead of growth at 9.7%. But more importantly, over the past week or so, we've had results from ThoughtWorks, from TCS, from Netcompany, and there we're seeing a steady improvement around the underlying KPIs. So I've got positive in there. Now, Ian, I confess, I've deleted your birthday on my calendar, and instead I've put in my key date as the 14th of October, 2025. And the reason for that is that is the withdrawal of support on Windows 10. So what we're looking at is the start of a replacement cycle. Clearly, as we both know, corporates will be slow on the upgrade cycle, and they tend to need that great big kick, i.e. no support, i.e. whoa, just prepare for all the cyber criminals targeting you. But remember, all that shiny new stuff that was bought for lockdown, that's being depreciated, and now we've got a reason to upgrade. So that's a real plus. Looking specifically at the sector, TSR, total shareholder return, has turned positive. It's plus 5.7% year to date. To remind you, that was minus 10%, calendar 23, minus 20%. Calendar 22. So I see a positive.
As you told me last time, it's never a straight line.
It's never a straight line, but at the moment it's a positive line. Reasons to be cheerful. That's what I've been doing this week, and I've come away from it very cheerful.
Well, I have to say that the last few days for me have been burying my head in the Raspberry Pi documentation, such that there is, just trying to get a head round it, really. We've waited long enough to find out about this. It's been hanging around in the ether for a little while. They talked about it being a US float, but frankly, when the valuation is only around about £500 million, it was never really realistic for this company to go to the US.
Ian, is this another reason to be cheerful?
Yeah, yes. Sorry.
I'm amending my report card as we speak.
I think there's reason to be cheerful if the UK market doesn't muck it up, because it has to be said there is still room for failure. There is the opportunity for the UK market to grasp defeat from the jaws of victory. Beneath the noise, and it's not noise of Raspberry Pi's own making. Raspberry Pi is a nice UK-based company. It generated $270 million of revenue last year, made profits at the operating level of close on $40 million, shipped over 7 million of its single board computing modules. It's a proper business, and it was only started trading back in 2012. I think this is what is known as a British success story, and it is therefore an ideal candidate for floating on a functioning national or regional small cap market, should one exist. I'm very interested by it because it's in growth markets. It's got a total addressable market of $21 billion. Okay, it's a long way short of having a big market share there. But then again, so are most other companies in the market. It's fragmented. So there's much to go for. We can understand what the applications are of these small computing modules. Everyone has spoken about this company in terms of the hobbyist market, in terms of the educational market, which is where it comes from. But last year, 70% of the units shipped were into industrial applications, and it's industrial applications where the real future is. And if you really wanted to get excited about it, you could even throw in a little bit of AI, because these little modules, these Raspberry Pi devices, they can be gatherers of data, and they could even one day be interpreters of data as well. So another reason to be positive. And we might even get some AI into some numbers somewhere. Looking at the numbers actually in the detail themselves, first thoughts are, margins could be a bit higher. Gross profit, 25%. Operating profit, 14%. There's a clear indication there that with a little bit more aggressive selling, the gross profit could go up a bit. But of course, in order to do some more aggressive selling, you've got to have some sales effort, and therefore your sales cost is going to go up.
Selling is one of your hobby horses, Ian. And culturally, you said in terms of where this business came from, it came from the hobby industry. I've got an unknown number of Raspberry Pis sitting in various places.
Are you a believer?
Sadly, you probably have them too, because I think we all do, but that doesn't make a commercially viable business. And now you're talking through lower margins. They could improve them if they were more aggressive on the sales. If they did, then suddenly you'd have extra costs coming in. Where is Raspberry Pi culturally, Ian? Could they make this transition?
This is the difficult question as to where are you in this transition process. They have put in a new chairman. They've got a number of important non-execs there. And I think culturally, the new chairman is important because it's Martin Helliwell.
It's Martin. Oh, okay. Tell me more. Yes.
So ex-CEO of Softcat, ex-computer center guy. If there is someone who knows how to sell bits of software, bits of computing stuff, it's Martin. And there's a lot of work to be done, clearly, because although I've been talking about it as his amazing success so far, it's really only got itself around the UK market. 40% of its sales are to the UK, 17% to the US, Europe 23%. So there's a lot of work to be done, and it's far from guaranteed. And when you play around with the numbers, you can start to get a little bit concerned about where it is going. And some people might be concerned about the amount of development work that's been capitalized, because that's knocks the margin by about 3 or 4, maybe even 5 percentage points. And that might upset a few people. But the general direction of travel is good. I don't think there's anything that I would say was terribly wrong with this business. It's come from a strange background that meant that it hasn't navigated a particularly straight course to where it is, and there's still work to be done. But I think it's not impossible to understand this business. Sort of a litmus test for the UK market. On one side, the analysts have got to come out and produce sensible research and to explain it nice and clearly, and to not get lost in tech talk, and to focus on the numbers and where we're going with margins, where we're going with markets. And on the other side, after however many years, decades, the UK institutional investors actually going to say, hey, this business, it's not priced to go. We have to face that. But it's not complete wild and wacky valuations either. So there's a debate to be had. And I think it would be extremely useful for the UK market to be in a position to say, this is why we do like it, this is why we don't like it, to sort of put up or stump up in terms of both analysis and cash.
In fairness to the UK institutional investor, They have cash. They have cash that they can deploy. And part of the fact they're having cash is that they're doing so well with sector takeouts at the moment. Ian, why wasn't Raspberry Pi an industry takeout before it got to this stage?
It's still a work in progress. You
Yeah.
can't say that it isn't. And culturally, whilst the journey from being a Cambridge business that has a sort of educational hobbyist background working its way into solutions and quirky stuff across the industrial market, you can see how that can fit into a public market. I would have thought that sticking that into private equity would be a cultural fit too far.
Is there any history of companies that have been run by a charity, owned by a charity, then make the transition to sort of public markets or indeed to more successful commercial business models?
The ultimate example is Wellcome Trust ownership.
Right.
Because, of course, that translates into Glaxo and GlaxoSmithKline, and it's hard to see that as anything other than a success over the years.
So we have a template.
We have a template, yeah. It's not an excuse for the UK investors to start worrying again.
Right. And in fairness, it's not that they're being overrun by IPOs, and they have cash as well. It's a UK company. It's a homegrown IP-centric business. Where might that go wrong, Ian?
It's done okay in the UK. It's the international story that needs to be built out. It needs to show that it's more than just a nice UK business. It's got to do more than just make inroads internationally.
Yeah. And as you said, 40% of revenue is from the UK. Can I say, stop a minute? You mentioned Martin Helliwell as somebody who can drive a company. I know you've been quite close on your work that you're doing on go-to-market to looking at Softcat, which is one of the companies that you've highlighted in your recent research there. Any sort of general points there that you'd like to tease out in the sense of we can learn how Martin might take Raspberry Pi, given what he's done at Softcat? Do you see any lessons or parallels there in terms of how go-to-market might evolve?
He understands how distributors work, how resellers work, and value-added resellers. And when you look at the challenges in front of this business, it's about getting somebody else to help with the sales process. And that's what resellers do. These products aren't going to sell themselves. You can sell yourselves in a nice little quaint hobbyist market and the educational market, but it does need somebody out there to give it a bit of push, give it a bit of explanation, knock on some doors. And that's where Martin Helliwell comes from. And that's what is required. I know it's a little bit un-British, but it has to be done.
Also, in fairness, at Softcat, you've got quite a low average selling price relative to, people like, say, Computer Center. So Softcat average selling price is sort of mid-30s K. So presumably he can deal with the low price points in terms of what's the best selling model, given that this is my average selling price in terms of get to market. Softcat's been very slow in terms of the internationalization of the company. Now, they have made inroads. They've gone into Ireland. I've got to say they've gone into Scotland, but we can have a debate on internationalization. He's talked about going into America. When you look at Raspberry Pi, has got similar issues in terms of it needs to internationalize better. What's the likely template there?
It's lower end industrial equipment. It's not big bits of kit, as you say. This is value-added widgets that you do something clever with, but it's not a big, long process sell. It's there. We can help you. This is what you need to do to make this work for you.
Also thinking of sort of lessons from Softcat, which we might apply to this. Clearly, in terms of the distribution industry, supply chain and inventories has been a big story since 2020 and the pandemic. On one side, shortage, and then sort of surplus kind of thing, where we've then seen the company sort of work down inventory levels, release working capital, lots of cash then comes in, and then you can distribute that. In terms of the Raspberry Pi model, is inventory important? Where are they in terms of global supply chains?
In terms of where they are at the moment with their inventory, they've got too much. There's been a lot of knocking backwards and forwards over the last few years, as you say, with the semiconductor supply chain, with their own production and with their own routes to market. I can't see from the detail at the moment exactly how the resolution comes through, but it's one of these situations at the moment where we don't have the information, we've just got the questions. But we do have, looking at how this business has built over the last 10 or so years, some kind of idea that this is an intelligent, competent management team. They are going to sort it out.
And as you unlock inventory, you're unlocking working capital. So that is a positive. That said, is there anything about aging of inventory? You've mentioned AI in your
Yes.
earlier preamble. Is there anything about sort of new development? Everyone's conscious about CapEx in terms of we've got to spend more on R&D because everything is being made obsolete with the push on Gen AI, which for these guys is really a story around the push on GPU. Are they pulled into those sort of architectural wars at all?
Not really. Their issue is very much they are low power, ease of use, RISC processors. They use an ARM basic architecture is where they've come from in terms of the whole sort of ethos, really. It has to be said that ARM have taken an investment in the company. And whilst it is tempting to sort of say, oh, this is going to be another ARM, it's not going to be another ARM because the business model isn't the same. But I do get that feeling of almost Cambridge mentality of here's a problem, we're going to solve it, we're going to exploit it without being crazy tech world American bang the drum about it. Giving people a bit of technology that sorts the problem, addresses the problem, and you don't go too far beyond that.
Yeah, I have to say though, Ian, just listening to you there, some of the keywords you came out with, low power, small footprint. I'm sitting here writing edge, edge, edge. If we think about sort of, edge computing plus the whole IoT world, which in fairness, we've all forgotten about since Gen AI came out there is a big opportunity for the world as more compute moves to the edge. And then the other side of it is that more devices from the edge get computing power. Now, admittedly, you'd say, well, that should be the ARM opportunity, but maybe some guy coming in with a smaller footprint with still the underlying attributes of low power, small footprint could be really interesting.
Well, I think this is sort of twas ever thus, really, with this anything that's semiconductor powered, have developed their own chips. They are very much into creating their own environment, should we say. I think the goal is people will know that you've got an easy to use set of products. They're going to be low powered. They're going to do what it says on the tin. You can create a brand. You can create a belief, frankly. When you're looking at the industrial applications, you're fairly sure that the people who are going to be putting these bits of kit in will know how to use any sort of low-powered single-board computing device. But when something is convenient and is something you know is going to work, it's what people will go for. It's quite interesting to see people arguing online about, $20, $40, $60, $80. What's the right price point? Frankly, the big price point issue is actually installation and maintenance and making sure it works, because an hour here, an hour there wasted of any technician's time pretty much blows away the cost of a Raspberry Pi anyway.
I mean, in fairness, Ian, you're talking around the importance of building the ecosystem, the importance of building the third-party developer community. If we look into NVIDIA, the huge strength has been, you could say, George, the strength is on many levels, but one of them has been on CUDA, the software platform, which has given them such a giant market share in terms of the Gen AI world. Are you sensing anything from Raspberry Pi that it is thinking about that ecosystem, the developer community, in terms of building up that ecosystem of applications, folks who are using the chips in anger to come out with new applications?
I mean, this is very much at the core of where the business has come from. I think it's one of those things, it's almost impossible to strip out the community element from this business. You look at what it goes into, you look at the websites and think, I've made a device, I'm selling this device, this machine, which has got a Raspberry Pi board in it. I'm putting it up on my website. You can go and see it on the Raspberry Pi websites. There is a community there. That is a cornerstone of strength, as it were. But it is not what is going to be the thing that drives everything. You don't want to spend your entire time looking at this community and thinking that is what is driving it. That community is there because the product is relatively easy to use and it's flexible. And it's the flexibility in the relatively easy to use that will be driving the user base forward, as it were. It is a bit chicken and egg, it has to be said, but it's very much part of the mindset of the company.
Brilliant. Well done you. How exciting. You're on top of the story.
Well, I'm not sure I am. I haven't got enough data yet.
No, I'm only on top of Keir Starmer and the pledge card. Well done, Ian. Again, you're ahead on points. Well done you.
Well, it's been an interesting week, and we'll see what happens over the next few weeks.
It's all go for me next week. We've got First Derivatives coming out with final results. We've got Ditto coming out with Kainos. So the Irish flag is raised proudly next week. I need to get my victories where I can.
I think the UK market needs to get its victories where it can. And frankly, when we look forward, it needs to show that it knows what it's doing, because that's what draws people into thinking that they can be a listed company and that they want to be a listed company.
Very good. Very, very good. Thank you very much for your thoughts.
Brought to you by Progressive Equity.